All right, hello, and welcome to Campbell Finance. I'm your boy Campbell, and as you could probably tell by the number of tabs we've got open, we've got a lot to go through today. I kind of mistimed my fishing trip yesterday. I went fishing yesterday because I thought I had time to relax, and then midway through relaxing and fishing, I got a text to say, did you see the hot PPI print? And I was like, okay. Anyway, it doesn't really matter. I want to show you my thoughts. I'm going to go through all of that stuff. I've got loads of cryptocurrency news to show you as well. So in the meantime, sit back, relax, and let's get into this. This is on the front page of the Wall Street Journal, okay? Bitcoin's future depends on 6 mysterious coders. A handful of developers with the power to change the cryptocurrency software hold an unorthodox role, are elusive, and have been known to head off disaster for the coin. It can be very scary. There's not a syllable in there that is the truth, okay? So I guess they don't want anyone to buy Bitcoin. They're trying to shy people away from it. But 10 minutes of research will let you know that not a single word of that is true. So anyway, that just remains a joke for now to open on. I've got to take it from humorous to a bit more serious now. What's happening in Nigeria is really quite concerning at the moment. So a bit of backstory, just so we can set the scene in case you're not aware. They have had, in Nigeria, a CBDC for over a year. It has less than 1% adoption of the adult population. Meanwhile, Bitcoin adoption is now over 40% of the Nigerian adult population. The banks and governments have been applying more pressure of late. They did things like limit cash withdrawals to try to encourage and force people to switch over to the CBDC adoption. This, however, did not work as Nigerians continue to refuse the CBDCs. And what just happened over the last few days is they have just made cash no longer legal tender. Meaning any cash you had withdrawn, any cash you had somewhere in your hand or in your house, no longer can be accepted anywhere. And what's in the bank means that you could potentially convert it to the CBDC or lose it. That's it. Those are your two options. So as a result, Bitcoin is now currently trading, depending on the day, between 50 to 100% premium over spot. And this is because the people that have Bitcoin don't want to give it up now. Okay, so it's a very good example of why you need to exit the system before the crowd figures out what's going on. If you type in Nigeria Bank or something like that into Twitter, you'll find a bunch of these videos, and you can see that there's all kinds of riots, fires, protests going on at the same time. You can see also people have been smashing in the ATMs and destroying the banks and setting them on fire. And they continue to riot in the streets. So really serious things are happening in Nigeria. And you can see here, this is a bank run where they managed to get through the gates and then pour in. So it's a really serious issue that's going on over there at the moment. And I think what's more concerning is this is likely going to be coming to a country near you in the not too distant future. Again, only the people that have the Bitcoin have any chance at freedom. If you're the sort of person that keeps all your money in cash or the bank, then look what's happened here. All of those people are completely wrecked. They now have absolutely no choice but to embrace CBDCs or starve. Only people that have exited the system ahead of time with gold, silver, and Bitcoin have a chance at freedom and self-sovereignty. It's not just Nigeria, as you can see here. This is the bank being set on fire in Lebanon after they were unable to take their money out. Customers were unable to take their money out amid a 170% inflation year last year. But as you can see, it's not a nice time to be a citizen of these sorts of places. And please don't make the mistake of thinking it couldn't happen wherever you live. So, US PPI. US PPI came in hot, okay? It was above forecast and above the previous. PPI is essentially inflation for producers, and it can help predict future consumer inflation. This hot reading will worry markets, and inflation is not falling as quickly as it hoped, and that the Fed may have to increase quantitative tightening. So I couldn't have said it better myself, and this is why the markets are chopping around a little bit as of yesterday, and I'm sure that will continue today as well. So ultimately, PPI data came in hot, and this could spell trouble for Jerome Powell. The Fed speakers yesterday, he said hawkish messaging, I presume, and of course that's what we had. We had Bullard come out and suggest that maybe a 50 basis point hike was needed in the near future. Jordan put it spot on here. Today we see what type of market we're in. Is it data dependent or one that will shrug off the bad data? It seemed to be shrugging off the bad data right up until the close, and then it suddenly became data dependent. So a bit more time for the dust to settle. Ben nails it here. He said it's hard to imagine the Fed going back to 50 basis points despite Bullard's comments. CPI would have to come in extremely hot next month for it to be seriously considered. And Jordan said, yeah, absolutely. It's much more likely that they'll do an additional 25 basis point hike in June. I think what's important to point out here is it's not the 50 basis points or the additional 25 basis point hike that is the problem. The problem for the markets is they hate uncertainty. It's the not knowing. So long as there is clarity around which one of these is going to be, I don't think it's going to be a long-term problem. Of course, that remains to be seen. James here said, look, even hotter than expected PPI couldn't kill this market. The buy the dip mentality continues to win, or at least it continued to win until the close, and then at the close or into the close, we saw the market sell off quite heavily. However, I don't think technical damage has been done yet, and we will get to the charts in just a moment. Bitcoin doesn't care though. Have you noticed Bitcoin? I'm sure you have. 24k Bitcoin yesterday as a whole heap of shorts got liquidated. Did you buy the dip? And you can see here a total of 206 million positions were liquidated. We actually got an interview with Capo here, so I'll play you that.
Le vamos a preguntar a este vecino, ¿qué cree usted que está pasando en Telde? ¿Qué es lo que está pasando en Telde? ¿Qué pasa en su corral? Zapatero, ¿qué opina usted del gobierno de Zapatero? Pues igual que yo. ¿Y qué opina usted? ¿Qué opina usted del gobierno canario? ¿Y de los ayuntamientos de la isla?
So that was Capo for you. On top of that, okay, Bitcoin, its recent pump has taken it above the market cap of Visa. Bitcoin is now worth more than Visa. So again, we continue to see this, and I'm sure this will continue to unfold over the coming year. Did you notice amongst the SEC anti-staking news that I made a video and I said, look, there's a bunch of FUD out there, there's all these things. Did you notice that already the inverse bar is complete? It was not Bitcoin related anyway, but you can see here, all of this inverse bar pattern was off the back of the SEC attacking staking. And all it really was, as you can see here, is FUD. It's FUD, okay? Circulated via the mainstream media. This caused a bit of a drawdown, and then what happened? The price explodes to the upside, and all of those people that were panicking and believing the mainstream media in here are now left without positions or on the wrong side of the market. Meanwhile, conviction amongst long-term Bitcoin holders remains rock solid. The Bitcoin reserve risk is still at the lowest levels ever seen, as you can see here. Long-term holders currently hold over 73% of the Bitcoin supply. So this is absolutely massive. People are not giving up their Bitcoin, and the more the price continues to pump, the more this bull market looks for real, the more adoption continues to skyrocket, the harder it's going to be to get people to sell their Bitcoin. The short-term holder cost basis in purple is curling up and will soon be about to undergo a bull cross. Whenever this has happened historically, very good things have happened to the price of Bitcoin walking forward. The market will test the long-term holders' conviction, and max pain is here visualized. We also have Newport coiling up, leaving capitulation, moving into the hope and fear orange section, as you can see here. We also have the net unrealized profit and loss adjusted for market cap, as you can see, trying to flip green. Hasn't done it yet, but looks like it's about to. And finally, we have the long-term holder MVRV score. And you can see for the 30-day moving average, it has left this lower zone and is just starting to form a new uptrend. All of these things lead me to believe we're going to continue to see Bitcoin do Bitcoin things over the coming weeks. Over in Hong Kong, $337 billion broker IB has launched Bitcoin trading. Need I say more? Meanwhile, over 44 million addresses are now holding Bitcoin. As you can see, the trend is up and to the right. The US Senator has tabled a bill to make sure Bitcoin cannot be excluded as an option from 401k plans. So there you have it, Bitcoin in retirement accounts. And from the States to Singapore, Singapore's biggest bank, DBS, has reported an 80% surge in Bitcoin trading volume last year, despite the bear market. There is massive international and institutional demand for Bitcoin. Over in Wyoming, lawmakers have passed a bill to prohibit forced disclosure of Bitcoin private keys. Again, it continues to fit into this narrative of embracing Bitcoin and protecting Bitcoin rather than outlawing it. We are watching game theory play out in real time. People do not want to be left behind whilst the rest of the world gains competitive advantage. Back to Hong Kong, they will soon develop a thriving Bitcoin and crypto ecosystem, according to their financial secretary. Again, adoption at the highest levels internationally. And from countries and governments to individual companies, MicroStrategy is going to teach companies how to monetize websites and mobile apps with Bitcoin and Lightning. It just keeps getting better in this space. Meanwhile, on Wall Street, they are enthusiastic about El Salvador's bonds, which I have long speculated will be oversubscribed. So Bitcoin continues to do Bitcoin things. Bitcoin, I think, is acting very predictably. And unfortunately, the same cannot quite be said for the equity markets. However, we are seeing money managers piling back into stocks. And you can see that here, that the NAAIM exposure index is at the highest level since April 2022. The Nasdaq just witnessed a McKellen summation thrust signal. This indicates positive momentum in the underlying breadth of the market. Historically, this signal has led to more upside. So you can see here, however, there was an exception in August of last year. And lastly, we're still seeing a lot of hatred in the financial Twitter space. It's beginning to look like a hated rally. And I've been saying all along, if this rally is to unfold, and it is still an if at this point, but if it is, it's going to be the most hated, the angriest, the most shorted, the least understood rally that the world has ever seen. Fed, bond yields, CPI, PPI, PMI, fundamentals, TA, and even geopolitics don't matter in this market. As I've also been saying, there's a million reasons to be bearish, but that doesn't mean it can't happen. The only thing that matters is liquidity and sentiment. Liquidity remains abundant. So hopping into some charts, we've had some interesting developments, even though it's only been a day since I was last at this. The dollar continues to move up. So it hasn't rolled over sharply, but that's fine. At least we've got our answer. We know that, therefore, we're likely targeting at least 105.5 before a move lower, and possibly even higher than that into this trend line at 107, 108-ish before we can get rejection. But I do believe we will get rejection. Yields have indeed confirmed a breakout. As you can see here, we've had breakout retest, resumption higher, and we are now above this high here. So yields continue to run. This is not something I was expecting. However, given we've got talk of further rate hikes, I guess the bond market needs to adjust to that, and that's what we're seeing here. This could certainly put pressure on risk assets in the near term and in the slightly longer term as well. As ever, we'll need to take this one step at a time. My preferred look here would have been to see a rollover in yields, but that just hasn't happened yet. The strength in the dollar is pressuring the precious metals as expected, so sitting on the sidelines patiently waiting for an entry, and the same is true of silver, working its way down to the liquidity under here. So I like to see that, but again, no real trade set up for me at the moment. I am keeping my eye on precious metals, and I'm looking forward to the long because I think there's going to be good money to be made on here for those who are patient. Taking a look at crypto, crypto's kind of behaving exactly as you'd think it would behave, right? It seems to be on its way up, a little bit of rejection here. The question for me is it going to continue to put in a higher high and then drop into that cycle low and go? Or have we seen the high for this cycle now? Was that it? And does that mean we're going to drop down into this cycle low at the end of the month before moving higher? Of course, that remains to be seen. But for now, I did say all along, one or two scenarios. I said either we get a bounce out of the CPI and then we go into the cycle low, or we'll just grind from here like this into the cycle low and then go. For now, everything kind of looks as expected, and the same is true of Ethereum. I said Ethereum would trace Bitcoin, and that seems to be what it's doing. XRP, we've been stopped out. We're sat on the sidelines. We're waiting for another entry. That is fine. MATIC here doing really, really well. As you can see, it wants to lead, so let it lead. Not much more to say about that. Couple of points to make. This fractal chart, which seemed ludicrous, okay? We got ahead of it, but look where we are. We pulled right back into it. And now we're kind of heading up. Now, this would tell us to expect 30k Bitcoin by the end of next week. Is that possible before dropping into a cycle low at the end of the month and then going again? I think so. And I think this is right until it's wrong. For now, it still seems to be pretty much on pace with this fractal. So I don't trade based off fractals. I don't put much weight on fractals, but you can't deny that this move so far is actually quite similar to the one we saw out of the 2018 bear market low. And notice when we head into the Wyckoff accumulation, it looks to me like we're breaking out of the sign of strength, or trying to break out of the sign of strength. And you know what comes next? Massive, massive upside. So things continue to look really, really constructive for Bitcoin. The blockchain related stocks continue to look constructive as well. Of course, they are mostly tracing Bitcoin. I think for me, this is just going to be a hold on all four of these stocks into that cycle low, as I continuously say, for Bitcoin, and then we can load up again as we make the cycle low for Bitcoin. So for now, long and strong continue to push, looking for that cycle low to move stops up and add exposure. Tesla continues to rocket higher, as you can see here. So lose this upward sloping orange support line, and that'll be me out of the trade. But for now, I'm more than happy to continue to push this. FTSE 100 continues its uptrend, still above this red line. So nothing more to say apart from long and strong, continue to push. Things start to get a little more interesting, or a little bit weirder, when we look at the when we look at the volatility index and the S&P 500. So here's the VIX, okay? Breakout, retest, looking for that resumption higher. Anything can happen here. I personally am thinking that we're not going to see a stock market crash. The stock market crash has not fitted my narrative. We'll get to the equity charts in just a moment. The FTSE 100 continues to tear higher. Risk in Bitcoin is doing well. Whilst the dollar is running and yields are up, I don't think it's that much longer before the dollar's got a rollover, even if it runs all the way to 108. We've also got Monday and Tuesday as President's Day, I think, in America. I would imagine you would need to have balls of steel to be going short into a Friday close and then holding it through the weekend and then through a couple of holidays, right? I just don't see people loading up on shorts today. I don't see the smart money loading up on shorts. I don't see size loading up on shorts, at least. So as such, I would not be surprised if, even though we're severely red at the moment on the futures, I wouldn't be surprised to see the market actually close green on Friday as the smart money and institutions unwind short positions. I don't know why you'd want to open fresh shorts on a Friday and then hold them through the weekend and into President's Day. So that's just my thought. Now, I could be certainly proven wrong here. We still have the VIX hedge, as you can see, so that trade is still open. But again, amongst all of this sort of fear and shorts and, the bearish sentiment out there, really, what have we done? Absolutely nothing in a very long time. We're still range bound. We still haven't broken out above here, and we still haven't taken out these lows. We still have, if I clean this up a little bit for you, higher low, and potentially higher low at the moment. So for me, I don't think this is anything of concern. Even a move back down here, to me, would still be sideways, wouldn't it? So I don't really see a problem with the Dow. If I hop into the NASDAQ, we're still hugging this support line. It looked like we got a breakout, and a fake out here is what this is so far. And a fake out and then a breakdown would not be a good look. That would certainly be an early warning sign. But for me, this isn't the end of the world, and we could certainly break out next week. Overall, not too concerned, still above that low that we made at the start of the week. So nothing more to say about that, really. And the S&P 500 starts to get a little bit more interesting. Now, it's been a while on this channel that I've been saying I didn't have a clear read on the cycle count. Were we going to accept this blue count here? Maybe that was the cycle low. Or maybe we're about to drop into this cycle low and accept the green count here. 1, 2, 3, and then we can get rid of the blue count. So we'll find out over the coming days. We see, similarly to the NASDAQ, we've got this sort of downward sloping resistance line to clear. But get above that, and I think that opens much higher upside. So we'll see what happens going on here. Remember, all of this range in here, to my mind, is no man's land. Like, this is neutral. For me, bearishness and sell side impulses would come from a breakdown of that red upward sloping support line. So as long as we're above that, I can still argue bullish structure, because if you look at this downward sloping blue resistance line, I mean, we went higher, low, higher, low, higher, low, higher, low. Then we went breakout, retest, resumption. So even if we were to come back down here, we can still resume up. Okay, this is still a technical repair. It's only when we get below this that things start to get worrisome. The last couple of things I wanted to point out is Geo has in my mind failed as a momentum stock. So we got a nice breakout here. This is still, if it could recover up here and then break out, that would be fine. But to my mind, this has not done what I wanted to see. What I wanted to see was emergence from a base, emergence from a base, emergence from a base, and then set another base up here and emerge from that. It hasn't done that. So I'm going to say goodbye to Geo. I don't need to keep an eye on this anymore. And XLC just doesn't have the strength that I wanted to see from it. If we did something like this, where we trended up, we pulled back, and then we went straight away, then maybe I could add my long back. But for now, we captured a bit of profit, just like we did on Geo, and I'm kind of over this, so I'm getting rid of XLC. Of course, I will make sure I update you as and when I change or modify any positions going forward. So that's today's episode. I hope you found value here today. Make sure you subscribe and turn the notifications on if you want to continue to get updates on all my trades in real time as a pro swing trader. I still think this melt up thesis is valid. I still think that we have a good chance of risk coming on strongly over the next couple of weeks. There's always a million reasons out there to be bearish, but I just can't be bearish all the while we're completing technical repairs and Bitcoin continues to press on and make new local highs. Of course, I'm hedged. Of course, I'm open to being wrong. I'm open to being proven wrong if the market wants to prove me wrong. But so far, I think we can say so good. So in the meantime, take care from me. All the best. Cheers. Bye.